Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Jonathan from Convoy Home Loans. How you doing, man?
Good. I heard Dustin did the D almost
Yeah, I
come in
almost
at the
came
end.
out. I get so used to the same talk track sometimes my brain won't unlock. But thank you for noticing. I appreciate you listening so
Oh,
closely.
absolutely. Absolutely. It's in my ear, so I
Yeah.
hear it. I hear it.
I gotcha. I gotcha. Well, hey, Jonathan, you wanted to talk about interest only loans, why they make a little bit more sense today in the world of higher rates. Talk about some different programs you have. So what do you got? I'm going to ask some questions and maybe push back a little bit. We'll see.
Yeah, absolutely. So, I mean, more than before, the market has obviously changed, which we talked about in the last video.
Mhm.
We're no longer in a situation where, again, we kind of talked for a couple months about conventional loans and non-QM loans being a bigger of a spread.
Yeah, there was a gap
Um,
for about 6 or 8 weeks. Yeah.
Yeah, it was. But now that spread is basically like closed. We're back to a quarter to maybe a half at most different.
Hmm. Hmm.
And now we're looking at a situation where if you're going to be buying an investment property, and this is specific to investment properties, not
Investment prop.
primaries,
Yes.
correct? Because I get a lot of calls about, hey, can I do this on the primary? Will it actually make my payment lower? Sometimes it won't because obviously primary rates are a lot lower than investment.
Correct.
But just for investment properties, right now we're in a kind of a weird stage where now that conventional rates for investment properties are 6.8, 7,
Yeah,
7 and 8,
I saw
seven and
that.
a quarter on conventional 30-year fixed, right? And you're not getting those rates for free. If you're putting 20, 25% down, they all come with points, right?
Hmm.
So now you're in a situation where you are going to be paying principal and interest. And, the next video we'll kind of go over and I'll show you what the difference is. But
Hmm.
you're paying principal and interest, or especially because it's an investment property and you have to make the property cash flow because cash flow is the goal, right? You can pay interest only for $300-400 difference in the payment, potentially,
Mm.
maybe $1,000. And that $400 to 1,000 or whatever the amount is could be the difference in whether a property cash flows or doesn't, right?
Hmm.
And this is kind of a pivotal time that we haven't seen as much in the past than now because rents haven't gone up the same way rates have gone up,
Yeah,
right?
correct.
So now, in order for a deal to cash flow, you need to do whatever you need to in order to get the payment down. And the easiest way to get the payment down without actually buying down the points or doing whatever is to actually just make it interest only.
Hmm.
Yes, you're not paying, principal for the first 5, 10, 7, whatever years, but you are able to kind of stabilize and kind of get through this market with at least break even cash flow,
Hmm.
where instead of having to pay money every single month out of your own pocket to make the property actually break even or be
Hmm.
negative, because on top of that you're not just paying for the mortgage payment, principal, interest, tax, insurance, and association. If you have association, you're also paying for utilities. In some places you're paying for trash, sewer, electricity, water, everything, like maintenance, right? And
Hmm.
that's not factored into our calculation when we're calculating cash flow.
Yeah.
So the two, 300, $400 doesn't seem like much, but multiply it by 12, that's 2,400 to 4,800 bucks,
Yeah.
right? That can all go towards all these maintenance little factors that, through the next 2 years can kind of carry you through while the market is going through this, whatever it's going through.
So I again, I want to, I'm going to do what I do, push back, ask questions. So really, what I hear you saying is, this is a way to get a skinny deal to cash flow, and really, the power in this is it's spendable money, right? This
Mm-hmm.
is kind of back to the 40-year mortgage that you brought to my channel a year ago, or whenever that was, which Dion loved, right? Dion's like, I live on cash flow. I'll take, whatever the smallest payment is, I'll take it. Which, as a guy who's 50, I'm like, well, I'm not sure I want a 40-year mortgage, but I understand, right? If you're in the
Yeah.
growth phase, it makes total sense. This is kind of the same thing, right? Just so before I kind of dig in, are we talking 5, 7, 10 years of IOO, or we're talking like 6 months, 12 months, 18 months? When you're talking like this, what are you thinking?
I'm talking about 5, 7, 10
Okay.
years of
All right.
IO, because I mean, for the people that are, because even our, right now, obviously we kind of brought it up before, but like our 6 month arm that has rates in the threes and fours still, right? That is, we can do 10 years of IO on that as well. If you're
Right.
going to do IO, I recommend 10 years. The only reason I recommend 10 years is it gives you time to stabilize, because I think personally, yes, rates are super high right now, but rates go up and down. That's just what happens, right?
Yeah.
And over the next 5, 7, 10 years, hopefully we get to a point where rates start to trickle back down, back into the fives, or maybe hopefully even the sixes, right? I mean,
Yeah.
gosh, I want the sixes back.
Yeah. Yeah.
So if it comes down, then it gives you the opportunity to refinance again, because especially if you're an investor, you're going to do one of two things with your property. Or three things. You're going to pay it off, which is usually the least popular example or route. You're going to 1031 it, or 1031 like exchange it, or you're going to refinance it to pull cash out and reuse the equity. So you're going to do something within 10 years. There's no one that holds a loan more than 10 years on an investment property.
Yeah.
So,
well, there are people, but again, those are strange
correct.
people like me. So, but I would agree with you, like 70 or 80% of the folks. So I think there's a couple of things, right? If you do a 10-year IO, that feels okay to me, because basically what you're saying is sometime in the next 10 years, rates will be lower. And I think that's a decent bet. I think you're also saying within 10 years, rents will be up. I think that's a decent bet. I think you're also saying that the property will be worth more in 10 years. I think that's a decent bet. And to your point, at least while I was growing, right, I went through a growth phase. I had none of my mortgages. I want to make sure I'm accurate. Yeah, none of the mortgages I had the first 10 years, I had more than 5 years. I recycled capital. Some were just rate and term. Many of them were cash out, as I've shared many, many times. I think that makes sense. I am deathly afraid. Like if you were going to talk about a 2-year IO period, man, that is way too short. I have actually had a seller carry 5-year balloon. It's amazing how fast 5 years go. Yeah. I have no idea where things are in 5 years. But if you gave me 10 years, that feels okay to me.
And I mean, a week goes by in a blink of an eye. I sometimes I feel like Monday or the weekend's Friday, and then I blink, and then I'm back on the show. Yeah. So it's like, so it feels that way, and especially with the way the market is, right? We need to do whatever is possible to really harness the power of money and leverage to allow us to really continue to invest, right? Because and here's the thing too, Dustin and I we're also active investors as well. We're not just like talking about it and talking about investing, but we are active investors as well. So these are programs that we're using personally to be able to acquire and do our own deals, because like the most of people listening to the channel, we're self-employed. We own Convoy, right? Tax returns are always a struggle, but cash flow wise and making deals work, that's kind of what we have to do. So that's the approach that Dustin and I like to take most times. And if you've spoken to us, you'll hear it, is we try to make it as if that, hey, we're not going to tell you what you are always going to want to hear.
Yeah, I've actually heard from many of my people that follow you. You've told them no, that's a bad deal, which I respect. That's good.
Yeah, because I mean, at the end of the day, we look at it, each one like, it's our own too, right? Because it's a relationship with the client. It's a relationship long-term. We're not in the business of screwing people over.
Right.
So we really want to make sure that, hey, if you're going to do a deal, it has to work, right? And we'll kind of like work into it and work out the deal and show you why you should potentially go interest only versus not. And in the next video, look out for it, because it'll be there.
Yeah, that's actually funny. Again, we do these in real time. These are not planned or scripted. I'm thinking about this 10-year IO, which again, I could see the point, I'm comfortable with, but I really, for the first time, I really like the 10-year IO 30-year fix, which makes it a 40-year loan. That gives me the best of both worlds. That gives me ultimate protection, just in case Paul Volcker, we double rates from here. I like the fact that I can cap my high end, but I still get the 10 years of IO. So the 40-year product, which is made up of 10-year IO and 30-year fixed at the same rate, has never felt better than this conversation.
Yeah,
that feels perfect to me.
And if your time horizon is shorter, I mean, there's also the 30-year fixed with the 10-year IO, and it's a little cheaper than the 10-year fixed with a 40 IO, 40-year fixed, so there's like that IO option is available for basically all of our products. And it's kind of a mixture of whatever your time frame is calculated, That's what we'll kind of structure it through, but 5 to 10 years at least.
Time frame and risk profile.
Correct.
I might be on the risk extreme, which, hey, I am where I am. I just, for the first time, that 10-year IO 30-year fix just feels right. Because again, it controls the ultimate risk. And I like the fact that you have other options. So you have a lot of options that will be right for different people. How would they reach out to tell you their situation to see which one is right for them?
Yeah, email privateclient@convoyhomeloans.com, and please let us know that you're coming for more at.
There you go. That way you get Dustin or Jonathan, or sometimes I screw up and call it Dustin.
Justin.
Yeah, Justin.
Man,
I don't have my coffee this morning.
It's the market. It's the market. It's all good.
Oh,
it is what it is.
It's a rough day. These don't get edited, so blooper reel. Thanks, buddy.
Thank you.